Good afternoon and welcome to the Sound Energy PLC investor presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Graham Lyon, Executive Chairman. Good afternoon, sir.
Thank you, Paul. Nice to see everybody or hear from everybody today, and welcome to the October Stakeholder Questions update with myself, Graham Lyon, the Exec Chair at Sound Energy, and our CFO, Gary Dempster. I'm going to be the master of ceremony and go through the questions. We have a very brief presentation to show you. But most of the questions, I think, are going to be answered by Gary, as he's been heavily involved in pretty much everything we've been doing over the last few months. I will start then with a little bit of a summary of the disclosures, disclaimers, etc., and then remind everybody what our key activities for 2024 are all about. We have the phase 1 site construction ongoing. I'll show you a few pictures of that. For those of you who are not already following us on X or on LinkedIn, we tend to put the updates on the presentation on X and LinkedIn of where we are on the site. The tank is quite advanced now, and I think you'll all be quite pleased with the progress we're making on that. We've got to wells ready, and we've been preparing the road. So key though for us, and as you all have asked lots of questions about this, is our phase 2, our financing and our partnering, and Gary will answer a lot of questions about that. The key for that is closing with Managem clearly, getting the feed updated, close with the bank debt, lock in the GSA, and take FID as soon as possible, most likely first half of next year. In parallel, I think it's fair to say that we are now looking forward to re-energizing our business on the exploration front with the 2 wells that Managem are going to carry for us, and we have the 3rd well that we'd like to drill at Grand Tendrara as well. And then there's been several questions on the balance sheet strengthening and where we are in the finance. So rather than ask Gary to go through that now, there's a lot of questions, and I'm sure he'll cover them fully when we go through that question. So we're moving the company now very much from the development into the production stage with first revenues next year, but at the same time with our partnering, we're strengthening our balance sheet, strengthening our position. So I think we're getting ourselves into a good stronger place to move forward from. The activities on site are quite active, particularly with the tank, and you can see in that central picture, if you're close enough, you can see the roof is on for the inner tank, and there's a little nozzle that sits on the top of that. That's the vent, and the pipe, the pumping and the venting side. The base is all done, the insulation's in, a couple of levels have been put in, so we're making good progress on the tank finally. So that's a positive. On the well activity, those of you who followed us, we've safely and securely completed both the 2 production wells, T6 and T7, and we did that whilst we did not need to kill the wells. So we kept the hydrocarbons, the gas across the formation, but putting our burst discs in. So a good use of technology to ensure that when we open these wells up for production, we come, full blast at over 10 million cubic foot a day. The Star Valley rig finished the wells. We had a mechanical issue with one of the well heads, and we had to come back to that in August, but it's all ready, it's all done, and good support work from Bedrock Drilling getting us into that situation. The road, I know it doesn't sound much, but this is a key thing when we think of all the LNG trucks that are going to go up and down this all the time. So we've now got the tarmac, or the black top as they call it, on top of the base, and the bridges Now, those of you may not be fully aware, but there was massive floods in this part of Morocco a couple of weeks back, and rather than see the road washed away, it held up very well. Shows the design worked well, the gullies either side worked well, and the bridges we let for the water to run underneath worked well. So yeah, we were lucky enough to, well, we engineered it that way, but we were lucky enough that whilst we hadn't finished the road, the heavy downpour and the floodings didn't affect us. So I'm going to go through the questions in a minute, but the key areas of where Gary, I, and Mohammed Sagiri, our COO, have taken this company, and to some extent John Argent, our VP Geoscience, have taken this company in the last 4 years. We have a strategic, important resource in Morocco. There's a desperate need for the gas in Morocco. We have a phased development onshore, which you can do with the market being addressed in the industrial side with the LNG project, but also the gas to power market coming with the phase 2. We've now got a clear financial roadmap. We have a strong partner that we're bringing into the project with additional funding. And so we're going to be one of the key players in the Morocco energy transition. For Sound PLC, let's get all of this locked in and closed, and that will give us a very strong base to grow from, not just organically, but inorganically as well. So Paul, I'm going to leave this slide up, and then if it's okay with you, we'll go to the questions.
Fantastic, absolutely. Look, thank you very much indeed for that update. And of course, ladies and gentlemen, do please continue to submit your questions just using the Q&A tab situated on the right-hand corner of the screen. Just while the team take a few moments to review those questions we've had submitted today, I'd like to remind you that a copy of the presentation and a recording will be available on the Investor Meet Company platform. Graham, Gary, we had a number of questions both pre-submitted and throughout today's presentation. If I could just hand back to you in the first instance, please, Graham, just to read out those questions where appropriate to do so and give you a response, and I'll pick up from you at the end.
Happy to do that. The first question, and probably if it wasn't the first question that came in, it was the most important question, is where are we with the progress-wise with the new deal? More as a percentage towards the conclusion. Well, we will complete this deal, and sooner rather than later. Definitely before the end of the year, which is the long stop date in the contract. Multiple CPs, condition precedents, have been concluded. We're well advanced on all of the others. We'll give you the updates as and when it's correct to do that. But I think I can assure you that we see no barriers to closing in the next few weeks, save any major geopolitical situation. But I would say that part of the reason we deferred this Q&A from last week is I was in the mid-air down sitting with the CEO of Manager, and both sides have a desire to close this sooner rather than later, because Morocco wants the gas and Manager are there to help make that happen very quickly. The second question came in is, and Gary's going to answer a lot of these questions today, is one for Gary. Will you be making another raise before the deal is completed?
No, we're not planning any raises before the deal's completed.
That's an easy one for you to start with, Gary. The next question, and you can put a little bit more colour to it. When do you expect to start selling gas?
So as Graham's explained, phase 1 construction activities are advancing well. We're making really strong progress on the project, both on-site and off-site. So we're currently scheduled to begin selling gas by June of 2025.
Thanks, Gary. Another one is a little bit more historical. Where is Brian's 31 TCF? Why can't you find it? Brian left the company before I joined. So again, one for you, Gary.
Yeah, thanks, Graham. So I think hopefully, as most investors are aware, at the beginning of 2020, when we took up the leadership of the company, we consciously took the decision to deprioritize exploration whilst we reset the company strategy around development and production. Obviously, we've made strong strides against that renewed strategy. But we've always maintained the view that the company has significant multi-TCF gas potential across the full licence position we have in Morocco, be that in eastern Morocco or be that in southern Morocco around Sidi Mokhtar. But Morocco is, in relative terms, very much underexplored as a hydrocarbon basin, but we spent a lot of time up until 2020 and then since then still continuing to gather data, process data, etc. And we have an extensive inventory of prospects, leads and concepts from which we can try to further delineate the potential that we see within the prospectivity that we have in Morocco. The interesting part is now the deal we've got with Managem, that actually includes 2 carried exploration wells. So that allows us to get back to the exploration drill bit in the very short term. So we're hugely excited about the possibilities that offers us. Obviously, it's exploration that carries intrinsic risk, but we're pleased to be able to have the funding in place to move forward with the next phase of development of the portfolio that we have.
Thanks, Gary. I will actually read this one out because it's quite a good long-suffering shareholder question. As a very long-standing investor, how much longer before the company starts making some serious profits and ideally some dividends, no matter how small, so that we can also see some advance in the share price?
Okay. So as I just said a few minutes ago, we're scheduled to start production in June of next year from phase 1. Obviously, with that, we start generating revenue. So we'll be very pleased to start welcoming revenue into the company's bank account. And then aside from that, obviously, we've signed this deal with Managem, and we've also agreed a senior debt package with Attijara Wafa Bank. So the Managem equity component, the Attijara Wafa Bank debt component, that positions the company to take an FID next year as well, and obviously unlock the next phase of the development. So phase 2 provides the next layer of revenue for the company. I think I've explained before that phase 2 is approximately 3 times the size of phase 1, so it brings with it substantial revenue generating capacity into the company. If we take FID in the summer of next year, then we'd anticipate having phase 2 revenues and phase 2 production on stream 18 to 24 months later. So that's roughly within 2027. So that's not too far away in relative terms. So, moving forward, we've obviously got phase 1 developing, moving towards first gas. We've got phase 2 FID. We've got the planned exploration activities. We've hopefully got some accretive portfolio growth. So I think the investment thesis of the company is strong and it's starting to strengthen further. So hopefully, once we start delivering more against some of these milestones that we've set ourselves, then we'll see the share price react positively. I think the other thing I would just point to as well is that Zeus have provided a research note, so that indicates the net position of Cyan post the transaction in terms of free cash flow generation. So you can get a sense as to the significant cash generating potential that the company has in the short to medium term.
Thanks, Gary. And for those of you, the link to the Zeus research note is on our website. You just have to choose, the right. If you're a sophisticated investor, you get it for free. Otherwise, you have to register with Zeus. The next question is again about the LNG plant commissioning and subsequent first revenue. Well, I think you covered that, Gary. We're expecting first revenues in summer of next year, June 2025. Question here about Arran Energy Holdings. And please, can we have an idea of what assets does Arran Energy Holdings own and the value of the company?
Sure. So Arran Energy Holdings is the new name that we gave to Schlumberger Silk Route Services. So we acquired Schlumberger's position on the concession and the exploration permits back in 2021. We renamed that Arran Energy Holdings. It has a book value of £4 million, or it had a book value of £4 million at the end of 2023. That's obviously increased a little since then because we've other investments. And Arran holds a 27.5% interest in Anwal and in Grand Tendrara, so the two Eastern Morocco exploration permits. So obviously Arran will benefit from the agreed 2-well exploration program that we've agreed to with Managem as part of the transaction with them.
That's right, yeah. So even though the name is Arran, we benefit as Arran Energy from the Managem deal transaction. Next question's for me. The Managem deal is well overdue. Presentation would have been better after the deal is signed, surely. Well, it's 3 and a bit months ago that we signed the SPA with binding SPA with Managem, subject to the CPs. I think we've made very good progress in that 3 months. Some of it is compliance structured CPs, such as the dissolution of the Salo company, which has a procedure. It's not unusual to take this sort of time, 3 to maybe even 6 months. And unfortunately, in August, Morocco is essentially shut. So, but we are very confident that we will close this deal, and hopefully in the shorter rather than the longer term. We're committed to updating shareholders. So any time anything material is available, and you saw that probably in an RNS last Friday when the authority in Morocco made an announcement of a CP that we approved with Managem. And so we then, of course, released that as soon as we knew. And we updated everybody with the outstanding CPs. Those outstanding CPs are well underway. It's not that they're doing them sequentially, they're all being run in parallel. We also committed late last year to update shareholders regularly. That's why we've used the IMC forum. That's why we're having these Q&As regularly after particularly important areas like the AGM or the interims, etc. So we're always happy to do that. And we've also been doing flash video interviews. Gary did one recently after the interims. So this is why we're holding this one today. It would have been last week, other than my travel. And there was also a video interview from Dan Slater from Zeus, the head of research at Zeus, who has reviewed our company. So I'm hoping that we're ticking a few boxes and keeping our shareholders, stakeholders as informed as possible. A financing question for you, Gary. The recently agreed bridge loan facility has been agreed on eye-watering harsh terms, which obviously reflects the dire financial position that Sound's in at present and explains the current rock-bottom share price. Maybe. Was this really the best deal available, considering Ati Jawafa's offer, or are there other issues, personalities involved?
Okay, so I think we explained in the RNS when we announced the facility that it was put in place to provide working capital flexibility to the company if required prior to closure of the Managem transaction. And I think it's important to explain that the terms of a short-term bridge facility can't be compared to a long-term senior debt project finance facility. They're just completely different types of finance, different risk profiles, different investor universe associated with each of those facilities. So they can't be compared to each other. In fact, the terms of this particular facility, and I think there was reference to the terms being eye-watering, I can understand that, but actually these terms are at market. So, we're comfortable that the terms associated with that facility are competitive. And as I say, if we need to draw down that facility, then we can utilise that. And of course, we would pay that down if we do draw down as soon as we close off the Managem transaction.
Thanks, Gary. Another question on phase 1, which I think we've answered, which is equipment's coming to site this year. It's skid-mounted units, and we're going to be constructing it, plugging it all together, essentially plug and play type approach, with target first revenue in June 2025. One for you, Gary. It's all very well sound, but is there evidence that Africa Gas has established their customers for phase 1 LNG, and they've the necessary storage and regasification facilities so that they can actually accept the gas once we produce it? And does the Africa Gas have its tanker fleet ready? Because we need to move this LNG great distance between Tendrara and the customers.
Yeah. So we liaise continually with Africa. We have regular formal monthly meetings, but we also have informal engagements with them at various levels, the executive level and the project level, and particularly at the project level, to ensure that our schedules align with one another. So we're very comfortable that they and their customers will be ready to offtake LNG once we've completed the commissioning of the gas plant.
As people will see, we're jumping between topics because that's the way the questions were put in. But we're back to finance, Gary. The disposal of SEM East, that's Sound Energy Morocco East, the UK company we're selling to Managem. It takes us to 20% position in the concession, and these revenues are less than $6 million a year. How are we going to pay the bond off in agreed time?
Yes, so the disposal of SEM East principally ensures that we have the equity component of the phase 1 capex to enable us to take FID and get that project through to first gas. So that's now secure. Obviously, we'll have the debt component with that Yarawafa Bank on top of it. Phase 2, as I mentioned earlier, that brings substantial revenues to the company on top of phase 1. So obviously it positions the company well in terms of its financial capacity to meet its future debt and spending obligations as well. What it also does is it gives us more flexibility to manage and restructure the debt obligations that we have. So that's an active area that myself and Graham are pursuing at the moment. It's one of our key strategic priorities. So we're very comfortable that we will fulfill our financial obligations in terms of debt and hopefully optimize that position within the relatively short term.
That's good. This is a nice accounting question for you, Gary. Could you explain the meaning of the impairment that you took, the loss on development assets this year in the interims? What does it mean, and how does it impact the value of Sound?
Yeah, so I gave an interview a couple of weeks ago after the interims were released, and I explained that from a numbers perspective, we've taken an impairment of £146 million. It's clearly a large number, but it's important to understand that this is a non-cash charge, and it actually relates to how we apply the applicable accounting standards in the light of the sale of Sound Energy Morocco East. So it doesn't reflect the underlying view that the company has of the retained interest that we will have post-completion within Sound Energy Merija and obviously within RN Energy Holdings Limited. Up until now, the book value of the assets has been derived from the attributable cost of, principally speaking, acquiring the increased license interest from August back in 2015. And as some people may recall, at that time, the share price was around 60 pence. Obviously, it's not so, it was value. The book value was derived at a different time and a different valuation basis. Now we're valuing at what we call a fair market value basis. But as I mentioned, this really doesn't reflect our view of the underlying value that we will derive from the assets once they're in production.
Yeah, thanks, Gary. So it's an accounting matter. It's not any change in the value of the company. Next question is one for me. Graham made a comment on Cal Valley dragging its feet on the final agreement in the hope that this would, as indeed it did, weaken Sound's hand and allow for renegotiation with worse terms for Sound. Those worse terms have been agreed now with Managem. Are we now in the same scenario where agreement is being further delayed as part of the ongoing negotiation process? Have we established terms, or could they be further weakened? Does management share any of Sound's sense of urgency in getting the deal finalised? Well, let's start backwards. Yes, they want to finish this and complete quickly as well. So Cal Valley were dragging their heels, that's true. But Cal Valley had no idea of what that management were around, and management had no idea of what Cal Valley was doing. So please remember that the deal we signed with Managem is a binding sale and purchase agreement with defined remuneration, defined carry, etc. The deal with Cal Valley was a term sheet, which was not a binding term sheet, and that's what was taking us the time. We're also, the structure with Managem is much better. We're selling the UK limited company, and therefore it's a simple share sale and can be done quickly. With the Cal Valley deal, it would have been a share and asset sale in country, and that would have needed a whole set of different approvals, etc. So the doability of the deal was far more significant. But look at Managem's own website. If you follow them, they make releases about this all the time. So this is a strategic development for Managem. It's a new business line for Managem. They're not going to let this fail. So both sides want this transaction to conclude. And the deal with Managem, I mean, Gary can talk a little bit more about that in detail, but the headline, as we said, is 2 exploration wells, back cost, full carry-on phase 2, the purchase of Sem East. And within Sem East, there's a lot of devil in that detail. So it includes taking on some obligations that Sem East had on behalf of the concession. So it's a much better deal, trust me on that. And Managem, as a strong Moroccan partner, I think you'll find is going to be a big help for us as a company. Now we've seen another question for me now, or just to give Gary a break. Apologies, I had to leave them a second. The lights went out. It's on a movement basis. So we've seen pictures of the progress of the LNG storage tank, which is still quite a long way to go before commissioning. Can we have a report on ITEL fluids process? So yes, a lot of activity is going on site. The wells are ready. The flow lines need to be placed. That's under sound control. ITEL fluids are bringing the kit. They're designing, fabricating, transporting to site, and then commissioning. A lot of it is already fabricated. I think in the past we've explained that things like the LNG cold box is sitting in America, and we are doing the commissioning of that, the testing of it in America. We had to change the regulation in Morocco away from everything being hydro tested in Morocco. You do not hydro test LNG storage manufacturing cold boxes. That ruins them. So we've had to change the law, etc. The elements, they all come skid mounted. So ITEL fluids, then bring them onto site. We've got the pads ready, and then it's about connecting them through piping and the different connections, whether they're welded or bolted together. We presently plan for first gas sales in June 2025. Gary's already explained, but Africa is ready to pick up the LNG in their trucks, transport it the 600-700 kilometers away, store it locally, regasify it locally at their customer site, and sell their gas. So yeah, I think it's slower. I have to can't hide from the fact that it's behind what we would have liked as a schedule, but it is a vendor financed contract. So the capex has all been put in by ITEL. That's the sort of pro and con about vendor financing. Next question, more on Managem, Gary, and a bit more of the CPs, although we've touched on some of them. What are they, and how many outstanding, and any further progress, and when will they be satisfied?
So on the RNS from last week, we actually detailed the CPs that had been satisfied already and those that remain to be satisfied. So I'd refer people back to that RNS, and there'll be full details in there. Since then, we've actually continued progressing the remaining CPs. Since the process continues, we've got a lot of momentum around these at the moment. So we'll obviously update the market as and when these are completed, but we don't see any significant roadblocks ahead in terms of satisfying these CPs in the coming weeks?
I think it's fair to say, Gary, that it's in both companies' gift if we want to waive a CP. If we know that something is more procedural, that it won't affect the deal, but it's just not finalised, we can both waive it if we want to.
Yeah.
So we have a good relationship with Managem, and
Yeah.
After you.
I think the other thing, Graham, maybe just to clarify as well, because I think there is maybe a slight misunderstanding among some of the investors as well about what we actually signed in June. It is a binding agreement, and what we're doing now is simply going through a process of satisfying some conditions before we complete the transaction. So there has been reference at various points to when will we sign the deal. Well, the deal has actually been signed. It's binding upon both parties, and all we need to do now is satisfy those CPs to complete the transaction.
Yeah. I mean, it's simple things like just completing the accounts, and you need to set a line in the sand, and then if it's the end of September or the end of October, just within the week, concluding the accounts. One for you regarding the investment that Sound's made in Morocco, and does the cash that Managem offer us pay for what Sound's invested, and does it come close to the future share? So where are we with that? What's the investment, and are we getting our money back?
Yeah, okay. So Sound and Schlumberger invested more than $164 million in 2015. And actually, the overwhelming majority of that was in exploration. Then in 2021, we acquired the position of Schlumberger for $1 plus an NPI, which applies to the concession and applies to Sound Energy Morocco East. And in fact, Managem now have complete responsibility for paying for that, or paying out that NPI as part of the disposal we're making of Sound Energy Morocco East. In fact, there's no direct relationship between the money spent historically or the sunk costs, as some people know them, and the cash elements and carried amounts of the Managem transaction. They're not directly related. That said, the Managem transaction obviously repays the capital cost that Sound has invested since the beginning of 2022 on behalf of SEMI, which is significant. Currently, that's estimated to be around $13 million. So that's obviously significant to the company in the short term. Also, it provides future funding for the development on phase 2, and I mean, just to give you some sense as to what that means, and again, I'd refer you back to the research note that Zeus have prepared, which you can get access through the Sound website. So phase 2 should allow us to generate estimated future free cash flows in excess of $250 million net to our remaining interest in the concession. So that's a significant number. That's the estimated free cash from phase 1 and phase 2. So obviously landing this deal, and with the funding that provides, adding on the debt that we will access from Attijara Wafa Bank, allows us to access significant free cash flow in the future. And then what the transaction also does is it allows us to actually leverage some of those historical exploration investments that we've made through the 2 fully carried exploration wells. So as I say, of that $164 million, a lot of that was spent on exploration, some drilling activities clearly, but also a lot of money spent on acquiring data, reprocessing data, etc. And the deal we signed with Managem should allow us to reap the rewards of those historical investments that we made.
Thanks, Gary. This is the Q&A after the interim, so that's why I expect a lot of questions coming your way on the financial side. And here's another one for you. When the management sale goes through, Sound is left still holding substantial debt. How is this going to be repaid and within the agreed time frame?
Yeah, I mean, it's a good question. And I think the first thing to say is that we've always fulfilled our debt obligations, and that's something that we plan to continue doing going forward. Obviously, we've got several parcels of debt. The main component of that is the Eurobond, and as hopefully everyone's aware, we've restructured that successfully twice in the last 4 years. It's due to be settled effectively in 2027, at the end of 2027. So the repayment burden is still some way further down the line. But we are working towards managing this debt from both cash flows that the company will generate, but we also have an opportunity to buy it back at a discount to face value as well. We structured that into the restructuring process that we completed a few years ago. So that's a real opportunity for us, and it's an opportunity that's actively being worked at the moment. The second element we've got is the Africa debt, and that was the debt to fund Sound Energy's share of the equity component of the phase 1 development to enable that project to come on stream. The principal on that Africa debt isn't actually due for quite some considerable time. So we had a 2-year payment holiday on the interest from the point of first drawing that facility down back in 2022, and then a further 5 years from there. So it was 7 years from entering into that facility before we started having to pay back the principal. So that obligation on the debt side is still some substantial way down the line. By the time we have to start repaying the principal on that debt, we will be well into the production phase from phase 2, and obviously accessing much of that free cash, the significant free cash that I mentioned a couple of minutes ago.
Thanks, Gary. One for me to pick up. When the deal with Managem is signed, will the order to commence drilling on Emerald M5 be given immediately? Is there any reason for further delay? Presumably this and other decisions will no longer be Sound's control. Managem has offered to fund the exploration wells of M5 and SPK1. Is there some binding commitment to time? This can't be allowed to drag out. Well, I think the main thing to say for that is we clearly want the exploration well to get going as soon as possible, because we're not paying for it. But the transition planning that we put in place between Sound and Managem is designed not to lose any time, and that's not just in the exploration drilling, but that's for project delivery and getting to FID for phase 2. So clearly we want to commence the exploration process to get to drilling as quickly as possible. We're looking at that right now. Sound's doing that. From start to spud, it's around about 9 to 10 months. That's needed to get all the equipment in place, logistics in place. So if we can commence with Managem on day 1, it looks like we'll be spudding mid next year. Managem are the operator, but they're keen to get after these businesses, or this business, as much as we are, and so they've asked us to help them out. So we are going to be working a lot of this up for Managem. So you're quite correct that we officially lose control. Managem will be the operator. The entity, Sound Energy Morocco East, isn't changing. Sound Energy Morocco East is the operator. Maybe they change the name of it later on, we don't know, but that is the entity that's operating. So our team here in the UK will be supporting Managem during this period, but the team in Morocco, the Sound Energy Morocco team, move with the sale, and so therefore they continue the project activity. So another question for me is on exploration drilling again. M5 and SBK will require different rigs. Is there any reason why they can't proceed simultaneously? Well, the rig we have on site, we have 2 rigs on site actually. The Deutag rig we have on site, the T293, it needs recertifying, and that's powerful enough to drill the SPK1 well. The Star Valley rig 101, which we did the workovers with, that's actually on site as well, not at our cost, by the way. But that can't drill the SPK1. It's outside of the SPK1 is a deeper well and needs a heavier hook load, and the Star Valley Rig 101 can't do that. That said, doing 2 wells at the same time, peak on peak, is not really optimal. There's mobilisation fees for both rigs, there's demobilisation fees for both rigs, 2 sets of services, again, mobilisation for those services, cementing, whatever, casing, running, etc. So generally what is more optimal, cost effectively and resource management, is to spread a program over a longer period and allocate out those mobilisation costs and demobilisation costs across a larger program. So we have M5 and we have SPK1 paid for by manager. We would also like to drill TE4, and in a year or so's time, we'll need the first development well on for the micro LNG to be thought about to be spudded. That's called TE112. So we can see a 4-well program coming out. Now, a rig that can do all 4 is quite attractive to drilling contractors, so it'll be a much lower mobilisation cost because you spread those costs over 4 wells, not 1 well. And if you've got 2 sets of mobilisation costs and 2 sets of demobilisation costs, that becomes quite expensive. And we'd rather use the cash that management's giving us to drill wells, not to give to the drilling contractor in mobilisation. If we have a program for 4 wells, that could be a 9-month, 12-month program, depending on how successful the wells are. That will take us into development drilling as well, Tendrara for phase 2. So again, attractive to more than 1 or 2 drilling contractors. So yeah, whilst it's a good idea, I can see why people want to get everything done on day 1. It's really not cost effective and resource effective to do things that way. That was the end of the formal questions. We've had some come in today online, and shall we just take them from the top, Gary? You can see them and I'll have a look. First question from Amin. Helium has been identified in prospects near Tendrara. Could Sound Energy plan to explore for this resource in its upcoming medium-term campaign? Possibly. We think that there could be helium in other locations as well, maybe in Sidi Mokhtar. There's also potential for hydrogen, not just hydrocarbons. So, yeah, that's certainly something that we would be considering. We keep hearing the construction, and this is from Paolo, we keep hearing that construction is going well, but we never see phase 1 project timeline versus the real. That's good. Aren't we very late from production? Yes, we're late from production, and we're working closely with Ital Fluids. In fact, Mohammed Sagiri, who was in London up until today, is flying back tonight. He's with Ital Fluids in Morocco tomorrow, and yeah, we'll be working up to get to make sure that we can consolidate on that 1st of June next year. Gary, one for you, because it was before my time. What can you say about the Badili land sale?
So the Badili land sale has completed. It's one of these legacy issues, which I think I've referred to a number of times, that we've had to kind of wrestle with over the last few years. Obviously, predates the shift in strategy of the company. It took a long time for that land sale to reach completion. There were a lot of issues with permits, approvals, and regulatory approvals in Italy. But we did manage to successfully complete the sale of the land, and we obviously got some cash into the company as a consequence of that sale.
Thanks, Gary. Question here, which I can take. What are the plans from Sidi Mokhtar? The plan, the commitment that we have is a couple of well abandonments and to do some seismic. John Argent was down with ONHYM a couple of weeks ago. We're putting some suggestions to ONHYM on that front. We will be still an operator of Sidi Mokhtar, but it's seismic first, and then identify a drilling location, probably subsalt, and then at 75% we'll decide what we do. We've got an active farm out process going, and a couple of days ago we were having some very detailed conversations with people. Nothing concluded as yet, but yeah, we haven't forgotten City Mokhtar. Next question: can you please share more info on the management takeover of part of the concession of SEM East and the impact of the very value on historical shareholders? I think you answered that question earlier on, Gary.
Yeah.
So next question from Stephen M. Is there a gas sales agreement or at least work underway to secure it? Yes, we have a formally executed gas sales agreement with Africa Gas, 10-year take or pay in the form of liquefied natural gas. And yes, we have a mapped out gas sales, 10-year gas sales agreement with ONEE, again been communicated through RNS, which has to be concluded in line with the FEED study, the funding, the debt funding, and then when we take FID. So yeah, definitely gas sales agreements. That's the key to this business. Paolo, again, any details on exploration well timing? I think I've just said that. Steve Y, 2 of the 3 planned drilling contracts are paid for, but I assume TE4 will be paid for pro rata by Sound and Managem, or will Sound pay for it fully? No, you're quite right, Steve. Managem will be coming into the Grand Tendrara license at 47.5%, and they will pay their way, and we will pay the 27.5% equity position on that well. So you can see what I was saying before. If we can put a longer program together, 27.5% of I don't know, $7 million well, it's round about $1.5–2 million net to Sound, so it may be manageable for us. And so we would like to put a drilling program together that includes 3 exploration wells and 1 development well. Sean H, apologies for my first sitting on this presentation. Not being an operator, will you have a field or technical manager overlooking the operator in country and keep technical backup in the UK? We lose our team in Morocco, that's true. We will have, Gary is already, but we will have representation at the management committee meetings and the technical committee meetings. John Argent, our geoscientist, will be active on that. And so, yes, we will be a very active, what they call managed by others, participant. But as I said earlier on, Managem are new to, this is a new business line for them. So they want to build on the expertise that we have in Sound, and they are putting together an agreement for us where we actually act as their advisor, if you like, on undertaking this. Again, Alistair M, again on M5 and SBK1, I think I've announced that, it's around about 9 months. Maybe there's ways of squeezing it a little bit, or depending on supply chain, etc., it might go out a little bit. But clearly, we are ready to kick that process off. And it's not that we don't know where to drill. We've got the locations, we understand where it is, but we have to build a road to the site to drill it. We have to get some long lead items, and we have to secure the right rig. And so, yeah, that's where we are. Paul, I think that's the end of the queue.
As always, you've been very generous with your time and taken every single question that's come through. So thank you both for that, Graham and Gary. As I say, any further questions that do come through, you will have the ability to review those, and we'll publish responses back where appropriate to do so. But perhaps before redirecting investors to give you their feedback, which is particularly important to you and the team, Graham, if I could just ask you for a few closing comments, please.
Yeah, I'm just trying to think of what zingers for everybody to sort of take away. But I think we all know now, those of you who follow us, close the Managem deal. That is number 1 on our priority. And I have to say, Gary's been doing a brilliant job of ticking those CPs off. Bring in the past costs. That will put $13 odd million into our bank account, plus or minus. And that puts us in a much more solid position. And we are going to make sure we have an efficient handover operations and not lose any time. A lot of M&A activity fails because the transition planning's not been done very well. We started doing that even before we signed the sale and purchase agreement. Get gas from the micro LNG. That's again another priority, and Mohammed Sagiri's got that on his shoulder. Work up all the elements to get to the FID. Recommence exploration drilling. strengthen the balance sheet. So there's plenty to keep us going, right? And I mean, this is not the end of the road for us. This is basically a step up now. We're now on a much firmer basis from which we can take the company forward and grow. And we are already starting to look at that with our small team. But I'd like to just finish by thanking all of our friends in Morocco. And that means the ministry, that means ONIM, that means the banks, that means our shareholders, our stakeholders, the gas buyers, and of course, our new best friend, Managem. Lastly, I'd like to thank the small team we have here in London, and particularly the Moroccan team, the Sound Energy Morocco East, who will transition across to Managem in the not too distant future. It's been 4 years from the first time we did Gary and I did a first stakeholder chat. I think we've now delivered on some of the things that we promised we'd do. We've moved the company from a pure exploration company to one that's a development company with production in the not too near term. And we've also got the restarting of exploration plan for next year. So, hopefully we've been trying to deliver what shareholders want. Thank you for your patience and thank you for your time tonight.
Fantastic. Graham, Gary, thanks indeed for updating investors today. Can I please ask investors not to close the session? It should be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of Sound Energy PLC, we'd like to thank you for attending today's presentation and good evening to you all.
Thank you.